This indicator gives you 4 signals if the price is gonna advance or decline. You're gonna learn a very accurate trading strategy based on this indicator, so make sure you watch this video until the end and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, to add this amazing indicator to our chart, here we click on indicators and we search EMA trend meter, this one, which is written by Colin Mack. Alright, this is the indicator, and as you can see, it is added here below the chart. You can see that we have 4 lines here, which these are based on EMA, exponential moving averages, and this line here is based on stochastic RSI. For each time period, for each candle, we have a square, and depending on the direction of the market, it changes color: green for bullish and red for bearish. And here on this line, light gray bullish and dark gray bearish. As you guessed by now, when all of the lines are bullish signal, it tells us that there is bullish pressure in the market, so we have probability for advancing of the price. And when all of the lines are bearish signal, it tells us that there is bearish pressure in the market and there is probability for decline of the price. But the default settings of this indicator is a little bit noisy, and we have changing signals on every momentum changes that are happening in the market, in which many of them are not worth of trading. So we need to change the settings of the indicator so the indicator will perform better. Here we go to the settings of the indicator and we give them some special settings that will make the indicator to work perfectly for the strategy that I'm going to explain later. Here we have EMA baseline, and the 3 EMA lines of the indicator will be calculated based on the baseline. So the baseline will be actually the starting point of the calculation for the 3 EMA lines that are fast EMA, medium EMA, and slow EMA. Here for EMA baseline, we set the length at 8, and then here for EMA fast, we set the length at 13. For EMA medium, we set the length at 21, and for EMA slow, we set the length at 34. These are Fibonacci numbers. As you know, Fibonacci numbers and ratios are like magic, and you can find them everywhere, from nature and biology to formation of mountains and galaxy. And for unknown reasons, they have also application in financial markets. And many traders use Fibonacci ratios for estimating the extent of the price movement in the market. Here in this indicator, we use these Fibonacci numbers for the length of EMAs, which in practice, they perform very well. And here we have the settings for the stochastic RSI. For the K% line and D% line, the length are set at 3 by default, which are perfect for our trading strategy. Here for RSI length, we set it at 21, and here for the stochastic length, we set it at 7. Alright, we're done with the settings of the indicator, and now you can see that many of the noises are removed and the signals are not changing with short-term fluctuations in the market. You can see that the signals stay consistent during short-term pullbacks and fluctuations that are happening in the market. So when the 3 of the EMAs turn to green, like what happened here at this point, we can say that the market is advancing in an uptrend. And on the other hand, when 3 of the signals turn to red, we can say that the market is declining in a downtrend. And here, by the help of the stochastic RSI, you can confirm your entry point by turning to dark gray for bearish signals and turning to light gray for bullish signals. But still we have noises, and that is when the market is in a trading range and the price is moving flat. In a situation like this, we can have false changing signals from them. For example, here you can see that 3 of them turn to red, and here the stochastic RSI is also dark gray, but this was a false signal. So we need to have another layer of confirmation that can help us with non-trending phase of the market. In this video, I'm going to add another indicator that perfectly matches this indicator for generating accurate buy-sell signals. But if you know price action analysis, you can also use the price action concepts to know when the market is not trending, which is a better choice and more effective way because it is based on the structure of the price movement in the market. By the way, if you're interested to learn price action analysis, recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our indicator, and now let me add the second indicator and explain the trading strategy. Here we click on indicators and we search Andean oscillator, this one, which is an editor's picks indicator and written by Alex Grover. Alright, this is the indicator, and as you can see, it is added here below the chart. This is one of the best trend indicator on TradingView platform that it can also help us with non-trending phase of the market. We have three lines here, green, orange and red. When the green line is above the other two, it tells us that the price is advancing in an uptrend, and when the red line is above the other two, like here in this part, it tells us that the price is declining in a downtrend. And in another situation, when the orange line is above the other two, like here in this part or here in this part, it tells us that the market is not trending. You can see that it is perfectly showing when the market is not trending and the price is in a trading range. Alright, now let me teach you how you can trade based on this trading strategy and find accurate buy-sell signals in the market. In this trading strategy, first our focus is on Andean oscillator, and then we use the signals of this indicator for confirmation and entry point. First, I explain a long position setup, and then I will explain a short position setup. In a long position setup, here in Andean oscillator, we want a situation like this, where the green line crosses above the red line, and then after that, it crosses above the orange line. We don't take the signals like this, where the green line goes below the orange line and then again crosses above the orange line, because this can put us in the risk of being in the last movement of the price before reversal. We want to decrease our risk as much as possible, so we can only take the signals that have higher probability of success. So we only focus on setups like this, where the green line crosses above the red line and then after that it crosses above the orange line. When the green line is already closed above the orange line, in the next step we focus on the signals of this indicator. For the three EMAs, we want them to be green, and for the stochastic RSI, we want it to be light gray. If it is still dark gray, we wait until we get light gray. The stochastic RSI is faster and change with short-term momentum changes in the market, and as I said, we use it for final confirmation of our trade entry. When we got light gray, the other signals should be still positive. The three of the EMAs should be green, and here in Andean oscillator, the green line should be above the other two lines. So here the buy signal is confirmed, and in practice we could enter a long position at this point when the snoo candle was opened. The stop loss below the previous swing low and profit target at 1.5 risk to reward ratio. This was a long position setup, and now let me teach you a short position setup. For a short position setup, we want a situation like this, where the red line crosses above the green line and then after that it crosses above the orange line. Similarly here, we don't take signals like this, where the red line goes below the orange line and then again it crosses above the red line, because this is risky and we can end up in being the last decline of the price before reversal. So we want only a situation like this, where the red line crosses above the green line and then it crosses above the orange line. When the red line is closed above the orange line, here the three of EMAs should be red, and then here for the stochastic RSI, the color should be dark gray, which is the case here. If it is still light gray, we wait until we get a dark gray and we enter a trade only if the other signals are still okay. In our example here, when the red line is closed above the orange line here in Andean oscillator, the three of the EMAs are red, and here the stochastic RSI is dark gray. So the sell signal here is confirmed, and in practice we could enter a short position at this point when the snoo candle was opened. The stop loss above the previous swing high and profit target at 1.5 risk to reward ratio, and you can see that this trade was also a profitable trade where the price declined down to this point. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not encounter counter false signals. No, this is not possible. There is no trading strategy with 100% win rate, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.